All right, all right. So let's go ahead and jump into this. How to build business credit. I'm gonna go ahead and give you this 1 hour workshop as promised, or give or take. We'll talk a little bit about how to build business credit. And so on this webinar, here's what to expect. We're going to talk a little bit about myself. Who am I? Why am I here? We're also going to talk a little bit about the business. Fresco FICO. Who is Fresco FICO? What is it about? We're also going to touch bases on how credit works, what is business credit, and then our 7 simple steps to building business credit. You'll get a little insight onto what is a trade line, what are vendor accounts, and we're going to give you an inside view on our system that we've built to help people build business credit. It's called the Business Credit Builder. And we have an incentive for those who are here in attendance, our trade line promotion. So expect a gym, if you will, to support you in your endeavors to build business credit or report business credit to your business. So a little bit about Robin, me, myself, live, close, and in person to you. Who am I? What am I about? Entrepreneur by heart, business credit expert, loan specialist, credit repair specialist, real estate entrepreneur, if you will. Been doing this for a little bit over 10 years. It was back in 2004 when I started this journey for real estate, which led into understanding a little bit about business credit, a little bit about credit repair. Someone who really needs to figure it out how to get money. It's not like I had money already, or not like I had the best of credit. And I wanted to understand how others were accomplishing what they needed to do. And one of the things I realized is that everything was about OPM, other people's money, if you will. So it became one of my things where my focus has been to not just get others people money, but to help others do the same. Again, I was just like most people here that may be in attendance, a person who has a business, trying to figure it out, trying to get that business to take it to the next level, having a couple obstacles that they need to overcome, right? You may be that client. You may be one of those clients who may have bad credit, don't understand credit. You want to acquire business loans. Maybe you have tore up credit and you need help with your credit. You need to fix that problem. Limited knowledge on how business credit works. Limited knowledge on how to build credit. Maybe your business has been around for a short period of time, been around for a long period of time, but again, you're having trouble scaling. So that's where I come in at, to help you understand how to scale your business and take your business to the next level. And that's exactly what Fresco FICO is all about. Building business credit, having fresh credit, if you will. Now, one of the things one needs to understand in order to take it to the next level or to scale, you got to understand how credit works, right? If you have good credit, then you become a little bit more credible. And if you have bad credit, then you're not. But understanding this, how does your score based off of? Here in this graph, you can see you have payment history. You have your current utilization. You have length of credit history, the different types of credit and new credit. But understanding the percentage, 35% of payment history is going to show that you are credible. You pay your credit on time. When you're looking at business credit, they're going to want to see that on a personal level, that you have good on-time payment history, that you've been doing it for a number of years, so to speak, even on a personal level, before they give you business credit. That's one of the things about business credit, is that when they look at your personal credit history, and if you have what they call maybe a thin file, a lack of business credit, or a lack of different trade references reported to your personal credit, it's going to be hard for them to say that you're credible. And then if on your personal level too, if you there it talks about like 30%, but if your credit cards or anything that you have is all maxed out and you can't keep those balances down, or you can't show that you know how to keep those under that 30% threshold, then what's going to happen is you're not going to be as trustworthy in that respect. So they want you to show credibility there, show that you've had it, show that you can handle it. And again, that kind of goes into the whole length of credit history, and then they're going to want to see that you've had a number of different types of accounts. It's one thing to have like an auto loan, another thing to have credit cards, or like the store cards, store trade references, if you will, and then having new credit. This is how one judges one's credit in order for them to be credible, if you will, when it comes down to personal credit. But again, that is the support for business credit. And you got to understand who the bureaus are, where this information is. You have your personal credit that's going to report directly to the credit bureaus, Experian, Equifax, and TransUnion. And when you're dealing with business credit, it's exactly the same, except for then you have Dun & Bradstreet. So you have Experian, you have Equifax, and then you have Dun & Bradstreet. So on a business level, your credit report for your business will be reporting to these different bureaus. And this is how they're going to judge you, to know as whether or not you'll be able to pay them their money back. Now, going into this next step, a little bit about business credit, or a step further, one needs to know the distinct separation between the two when it comes down to personal credit or business credit. Again, you guys know that personal credit is based off of an SSN. That is on a personal file level, if you will. That information is going to report to Experian, Equifax, and TransUnion. And then the way the business credit is tracked, that is not via SSN, that is via DUNS number, DUNS, and that's through Dun & Bradstreet. That is the actual business bureau that's going to have that data. So business credit is not, with just your tax ID, or it's not tracked through your SSN or your tax ID number. It's tracked specifically through a DUNS number. So one needs to understand the two. And why is it important to have business credit or have a business number, DUNS number, versus just having an SSN number? Well, it's simple. Liabilities. Do you want to max out your personal credit? Probably not, right? You want to be able to leverage the two. Personal credit is just for personal. Business credit is for business. You will be capped, or you will be limited when it comes down to your personal credit. They won't let you go. They're going to cap you based off of your previous credit history. But when it comes down to like your business credit, so to speak, the sky is the limit. And you want to make sure that you separate the two, personal as well as business. When you're dealing with business expenses, of course, you don't want your personal credit to be affected by that, or your personal money to be the only reason or how you can support that business credit. So you got to separate the two specifically. And you want to do this intentionally, especially when it comes down to like books and business. You don't want all your expenses on a personal level to have anything to do with your business, or vice versa. Some of the benefits, again, with Separating the two, like I mentioned earlier, is bigger and higher loans and lines of credit that you'll get under a business level versus a personal level. For example, during the pandemic, right? How many businesses had to shut down because they were using personal credit to support and leverage their business? Many. You hear a lot about businesses shutting down. No more. No bueno. Not staying in business. Credit cards and everything maxed out. They couldn't support their business because they were using their personal credit. Imagine how that affected the personal credit. How many people had to file BK, or how many people, not just lost their business, but their credit cards was maxed out and their credit ended up taking a dump. And how many businesses scaled during the pandemic because everything was separate and it was all on business credit. Imagine maybe a very low percentage of businesses that scaled during the pandemic because they separated the two. So again, one needs to understand the two are two different ways of doing or operating, if you will. And business credit is specifically under a DUNS number, not your SSN number. Your SSN number is not to support your business. Just your DUNS number is to support your business. Now, we're going to jump straight into our 7 simple steps, our method to building business credit. And it's simple. You got to establish business credibility. The simple example would be when you're building your personal credit, right? It's all based off of you, your address, your SSN, your birthday, maybe your job history. All that stuff is how you start building personal credit, showing that you're credible. The same thing is going to apply when you're dealing with business credit and establishing credibility for your business. So step 1 is pretty simple. The EIN. What is that EIN? That EIN is your tax identification number. That is for tax purposes. When you get ready to file at the end of the year for your business, you got to make sure you have that. Make sure your business is structured properly by also having, a 401 listing. I would encourage ones to make sure they have either that 800 number or they have a phone number that they can register and list in reference to the business to the 411 listing. And it's also so valuable to make sure you have a Google listing. When you Google any business for that matter, that business should show up. Let's say, for example, Fresco FICO. If you Google Fresco FICO, you should be able to see exactly where that business is, the address, and that business actually exists. Just like you should have a website for that business. If you go to fresco-fico.com, you're going to have a website there, and you're going to have a phone number there, and you're going to have an email there. And you want to make sure you have all of that set up for your business. And I can't stress the value of having a bank account because that's where the money goes. You want to make sure that you have a business bank account, not your personal account, right? You want business money to go into that business account, personal money to go into that personal account. Separate the two. I mentioned it a little bit earlier, but again, look at it from a standpoint of having a resume from your business, just like how you show that you were credible on a personal level. You want to show that you're credible on a business level. This is crucial in the eyes of the person that's looking at your company to evaluate as to whether or not they're going to give you money. And then it boils down to making sure that information is stored somewhere. And you got to establish your business credit reports. Earlier, we talked a little bit about Dun & Bradstreet. We talked about Experian, talk about Equifax, then been the bureaus. Specifically, Dun& Bradstreet is where your business data is reported. All businesses or ideally will report their business credit to D&B. They will report their trade exchange, if you will, when it comes down to their business relationship to Dun& Bradstreet. And interestingly, the credit bureaus for personal level, like Experian, they also have a business division. They have the business side of, if you will. Same thing for Equifax. They have a business division, and that's where they're going to report that data for your credit reports. It's important to have these reports and these accounts set up. That way you can see exactly what's going on with your business credit. And then ideally, when ones go to check your personal, or not your personal, but when they go to check your business credit reports, they can see that you have your trade references or your business credit relationships reporting there. And touching on, your trade references, that's exactly what these accounts are called. When you have an account, let's say, for example, with like Macy's, how we have here, if that's what you have with Macy, a business account, you will want to report that data to Dun & Bradstreet, Experian, or Equifax. And it's going to be categorized as a trade reference or a trade line. And like the example here, if you see that you have, they'll see that you have a $10,000 trade reference, so to speak, and you only owe a little bit of money on it, maybe $3,000. You've had it for some time, and then they can say, okay, this is a reputable trade reference that you had, that you are reporting now to these bureaus, D&B, Experian, Equifax, and TransUnion. So simple steps. We talked about structuring a business, making sure the business is set up at step 1 and 2, establishing business credit report. Let's jump into another way, another simple method, our step 3. And step 3 is going to talk about how you build business credit. And we're going to start with the industry recommendation of starting with vendor accounts. Open starter vendor accounts. Now, you want to do this, again, to separate yourself from your personal credit reports. And you want to do it with vendors where it's not going to be based off of your personal credit. You can have bad credit. There's vendors out there that they want to give businesses business credit, and they're considered to be starter vendors, and they will open or allow you to open up trade reference accounts with them specifically to help you build your business credit. And again, it's not based off of your personal credit. It can be for good people or people with good credit, or it can be for people that have bad credit. And an example of this would be setting up an account with, like how you see here, something like the 76 gas station or Uline. Any of these type of vendor trade references can be considered to be a starter vendor. And those starter vendors will give you a line of credit, open up maybe $1,000 account, $5,000 account. You want to go there, purchase something with them, build and establish a relationship with them for over 30 to 90 days. And that would be that starter vendor paying, whether it's $25, $50 a month. And they're going to report that information over to Equifax or over to D&B, Experian, and that's going to help you start building business credit. That's part of step 3. And to take it a step further, we'll talk about the difference between vendor credit references and, let's say, your starter vendors, and then you have your higher tier vendors versus business lines of credit. So talking about vendor credit, what exactly is vendor credit? Exactly what it is. It's a place that you go to establish credit with. You do a trade reference with them. You give them some money. They turn around and report the relationship as a vendor to your business credit report, right? That's a vendor credit. And in comparison to like a higher tier vendor, we talked about Uline, or we talked about 76 gas stations, them being on the lower end vendor spectrum of the chain, if you will. The higher tier vendors, and we'll give you an example, some visual ways of that, but they're going to be vendors that are not as easy to get credit with in the beginning. They're them being like a second tier or a higher vendor. They're gonna want to see that you've actually had some type of vendor reference or vendor trade reference prior to. And those vendor trade references that you've had prior to, you may have done that 30 to 90-day relationship. Whereas when you get to the second tier higher vendors, they're going to hit you with that net 15 or that net 30, which means that you have to pay the bill by day 15 or by day 30. They're not going to give you automatically, time, whether it's 30 to 90 days to take care of that obligation that you have. But again, even the higher tier vendors, they still want to look a little bit at, let's say, your personal credit. Although they may not report that data to the business credit reports or to your personal credit, they're going to want to see how your personal credit look, and then they'll offer you that net 15 or that net 30. So as you see here, for people with bad or no credit, you're going to start with those lower tier vendors. And then those that maybe have okay credit or good credit, then they can, jump into the higher tier vendors. But again, you want to crawl before you walk. So you want to start with the starter vendors, work your way up to those higher tier vendors. And what about business lines of credit? What's the difference? You got vendor credit, you got those higher tier vendors. What about business lines of credit? Well, it's like with a bank, a business bank account that you have, or you show that you have all the, the ones that I mentioned before, the lower tier vendors, you show that you have the higher tier vendors, and then eventually you can get the business lines of credit where they're going to give you a little bit of liquidity, if you will, a line of credit that you can use. Credit card companies does that, whether it's American Express or, Visa or Chase, any of them, they give you business credit cards as some form of line of credit. And sometimes they give you, 25, 50,000 line of credit in comparison to like just the starter vendor accounts. And the business line of credit could also be not just liquidity in comparison to those vendor trade references. It can also be revolving lines of credit. The goal is to make sure that you have business lines of credit as well as vendor trade references to establish your business credibility. Not all trade lines are equal, right? So there's a distinct separation between all the above. Some may want to see that you have a credit report showing not just vendor trade references, but they may want to see that you have some business credit cards. But you want to strategically start and open these accounts up in a certain order. Let's go into step 4. So step 4, how does that look? Well, it's what others are seeing on your credit report, your business credit report. They need to be able to, you need to be able to know what's on your credit report, and others are going to want to see it. So you want to make sure that you monitor your business credit report. And why is this important? Because you want to make sure that the accounts that you are out there establishing relationships with, those different vendors, that they're taking that data and they're reporting it to that credit report. It won't do you no good if none of that data is there. I guess the best example would be if, let's say, if you have an American Express, right, and you have a business credit card with them, you want to make sure that American Express is reporting on the business credit report. Or let's say if you have something with Home Depot, you want to make sure that that's reporting to your credit report. So you want to make sure that you monitoring your business so that the information, or so that you know that the relationships that you have, the people that you're paying money to, is reporting that information to your credit report. And this way it can help you in your journey of building credit. Notice here, after 3 consistent months of payments, you could build a credit score on your credit report. And then you can show these new vendors that you're establishing a relationship, not only with the accounts that you have showed that you've taken care of, but you can show these new vendors how credible you are for them to give you a certain line of credit or a certain dollar amount. And then vice versa. You can go back to these vendors that you started your relationship with and show like, hey, I've been making on-time payments for X amount of days or for 2, 3, 4 months. Please increase my credit limits. Very important to do when you're building business credit. And step 5, start with building higher tier vendors. Earlier we talked about crawling before you walk, making sure that you have the first tier of vendors or the starter vendors. If you've done that for a period of time, that you have a couple different vendor accounts reporting to your credit reports, your business credit reports, and you've been making on-time payments to where you can even go back and ask them to increase your trade line account. Then you want to start with these higher tier vendors. And we've given you an example here, Staples, Amazon, Home Depot. These are some of those higher tier vendors. They're going to give you a credit account based off of your previous relationships because they can see that you've had them for a period of time and you made on-time payments. They can actually go into, your credit reports that you have with these business bureaus to see that you actually have data already reporting there. And so then they're going to extend credit to you based off of those previous relationships that you can show. One of the recommendations here is to open 6 accounts with higher tier vendors, then repeat the process again, and then ask them to increase your limits. You want to do that systematically. You do the same thing with the first tier vendors. You've had it for 3 to 6 months, or you paid on time. You say, hey, please increase my credit limits. Same thing you're going to do when you get into the second tier or higher tier vendors. You'll do the same thing. You pay that for 2, 3 months, 4 months, 5 months. Say, I've been paying it on time. You ask them to increase your limits. This is all part of the method of building business credit. And let's jump into step 6. Open more accounts with higher tier vendors. We touched on it briefly, but opening up 3 more accounts with higher tier vendors and repeating that process and then asking them to increase your credit limits, that's just going to be part of the process. Systematically, you're going to want to do that no matter what. Over and over again, you want to do that while you're building business credit. Okay? That's part of the methods. The step to building business credit is repetition, consistent payments, starter vendors, higher tier vendors, then do it again. Higher tier vendors, successful payments, on-time payments, 3 to 6 months, 6 to 9 months. That's what you want to do. You keep going, and that's going to help you build business credit. Just make sure all that data is reporting to the credit bureaus, Dun & Bradstreet, Equifax, and Experian, to build your business credit. Very important. Looking at step 7 is after you've done, the first tier or the starter vendors, you've done the, higher tier, you show on-time payments, you've done this for, not just 3 months, but you've done this for 6 months, and you show that you are credible, if you will, under your business, then you can get into opening up revolving lines of accounts. Revolving lines of account. And how many do you want to open up? At minimum, you want to do 3 of them, right? And stay on your credit reports. Look at your credit reports. Know that that information is reporting. Who could be an example of this? Right here, we have American Express as an example. In order for you to even get like an American Express business, let's say credit card, they're not going to do business with you not unless they've seen that you've had those previous vendor type of accounts that was mentioned earlier. And so in order for you to have an open revolving account, again, we're talking liquidity, something that you can use as cash. You got to start with those vendor credit accounts, the early ones, whether it's the gas accounts or stuff like Home Depot or any of those lower end vendors, if you will. That's the only way you're going to get to having like an open revolving account. They got to see that you're credible and that you paid those type of peoples, and that those peoples are actually reporting to your credit report. That's how you do it in order to get open revolving account, something that you can go out and use, let's say $50,000 worth, pay that joint off, and that money is still there for you. Or you do that for a couple months, and then they turn around and give you a higher increase. You ain't got 50,000 no more. You got 75 or you got 100,000. Which kind of leads into process and time frame, how this works, right? Credit building, it takes a little time. It takes a little bit of understanding. Starter vendors, like I mentioned earlier, can have a 0 to 3 month process. To get into those higher tier vendors can have that 3 to 9 month process. And then to get those business and lines of credit, so we could say that that's over, 9 to 12 month period. One thing I would say is that a person that has good credit, they can show on their personal credit report that they have a number of different trade references that they've been paying on time for a couple years. Their debt to ratio is low or their utilization is low. They're keeping it under that 30% rule. And they have a variety of different trade references already reporting to their personal credit. They can skip this process and jump straight into having like a business line of credit with somebody like American Express or Visa or like Chase Bank. Myself personally, I've done it, having good credit, just skip the line, hurried up, and only having so many vendor accounts. And then I've gotten approved for business lines of credit because my personal credit is Trump tight, being in the high sevens or, low eights. That's how you can jump and skip the line and end up with, 25 to 50,000 easily. But you got to have that good credit. And that's how you can acquire a business line of credit in a very short period of time, whether it's within 30 to 60 days. We can show you how to do this. I can show you how to do this with the programs that we have to offer. But again, time frame, simply said, building business credit can take a little time. 0 to 3 months for the starters, 3 to 9 months for the high tier vendors. And then you get into the liquidity, the business lines of credit with the banks and the credit cards. Not unless you already have good credit. You can skip the line and we can show you how to do that, get you where you need to get to. So again, how to build business credit strategically. We gave you 7 simple steps. And to do this strategically, you got to be organized. And that's why we came up with the Credit Builder Suite. And I would like to give you a preview on how it works. For those that allow us to do it for them, help them to build business credit. We have a client portal. We got a suite that we bring people that's trying to build their business. And we have it organized exactly how I summarize it throughout this presentation. You can see here on the screen, we talk about the foundation, how to make sure that your business is structured properly. In step 1, and step 2, how to establish business credit. And then in step 3, when you start building your vendor references, how that works. Then there's step 4, monitoring your credit report and the data that's reporting. We're going to walk you through all that, right? Very important. And then you get into the vendor trade references. As you see here, we have a number of different vendor trade references that we can help you to acquire with our system to help you get it started. You can see some of the examples that we have here on the screen, things that we've actually done and successfully got approved for. You can see accounts like $1,400. You see amounts like $12,000. Credit Strong, $10,000. WEX, $20,000. These are approvals that we receive in the starter vendor area that we can recommend for those that's trying to build credit, and we can help you to acquire the same type of relationships. And before you can even get into like the tier 2, you got to have those previous relationships. And systematically in our system, you cannot move on to the next step, as you see, not unless you've actually did the first step. You got to have those starter trade references, and that's why you see not recommended, because you can't get to that second tier, the third tier of trade references or establishing those accounts until you take care of the first steps. But yeah, this is our system on how we organize our clients and how we help them to get there. This is our method of doing so. For those that are interested in the services that we offer of building business credit, we'll do it for a small fee. A small fee. And before we do that small fee, we're going to highly recommend that you purchase a trade reference through us. We can report that data that we're talking about. We'll give you a quick start. As you see there, you can get a trade line from us for as little as $100 for a $1,000 trade line, or you can get the $10,000 trade line for $1,000 and a $50,000 trade line for $2,500. This is us helping you get a quick start in reporting data to those credit bureaus. And of course, for a fee, we can set you all up for this. Make sure that you have access to our business credit suite for as little as $14.97. Something that we normally charge like $3,000 for. And that's to do it yourself, right? You purchase the credit suite. You build at your own speed. You'll have an advisory team follow up, call you and say, hey, are you doing what you're supposed to be doing? Don't forget, take care of this, take care of that, right? That'll happen to you periodically throughout a month or so, or throughout the months as you're going through your process. And then we have the done for you service, which again, normally we charge about a good $5,000 for, but for those that's on this call that's going to get started now, we'll do it for just $19.97. That done for you service is like that concierge. That's that top level where you have somebody do it for you. And they give you full disclosure on how it works so you know how to do it. Again, you'll be purchasing the credit suite, and then we'll take care of the rest for you. Disclaimer, the trade lines that we're reporting is not going to report to your personal. It's going to report specifically to your business credit. It's not considered a line of credit. It's just data reporting to your DUNS number. All right. So again, you have action at this quick jump start for a trading line to report to your personal, not your personal, but your business credit. And this is going to boost your credibility off top, even with not just with the starter vendors, but it's going to help you in that journey to get those higher tier vendors, show that you have trade credibility and that you know how to take care of business and handle your payments and keep your utilizations low. That's part of our business credit suite. That's our method. Those are our steps. This is how one builds business credit strategically. For those that's in attendance, I want to thank you for listening in. If you have any questions, contact our office. Toll-free number here, 877-739-0090, or email us. You got Robin at frescofico.com or info@frescofico.com. And then you have our website here for those that want to get started today. You can go to our website and you will see right up underneath the product tab, you can choose which program you want to go with, the do-it-yourself or the done-for-you service. Again, for those that have come in and started today or listened today, I appreciate it. Thank you for showing up, showing out. Until next time, this is Robin. I hope you enjoy your business credit building journey.